Imagine waking up one morning and finding your stock portfolio has multiplied 100-fold. Sounds like a dream, right? But for some investors, it was a reality. These investors dared to dream big and chase the elusive 100x stock, an investment capable of multiplying their initial capital by a staggering 100 times. While the prospect of such astronomical returns is undeniably alluring, the pursuit of 100x stocks is not for the faint of heart. It requires a deep understanding of market dynamics, a tolerance for high risk, and a healthy dose of patience. The allure of 100x returns lies in its life-altering potential. A relatively small investment, if placed wisely in a company poised for exponential growth, can mushroom into a fortune, securing financial freedom and generational wealth. This potential for extraordinary returns has fueled countless dreams and inspired investors of all levels to embark on their own 100x stock hunts. However, the path to 100x returns is rarely linear and often fraught with challenges. The stock market, with its inherent volatility and unpredictability, can be a cruel mistress, rewarding the patient and disciplined while punishing the impulsive and uninformed. Before diving headfirst into the world of 100x stocks, it is crucial to arm yourself with knowledge, understand the risks involved, and develop a sound investment strategy that aligns with your financial goals and risk tolerance. What exactly qualifies as a 100x stock? Simply put, it's a stock that appreciates in value by a factor of 100 from its initial investment price. For instance, a $10 stock soaring to $1,000 represents a 100x return, turning a $1,000 investment into a cool $100,000. These astronomical gains are not the result of mere luck or chance. They are often driven by a confluence of factors, including groundbreaking innovation, disruptive business models, and favorable market conditions. Identifying a 100x stock before it takes off is the holy grail of investing. It requires a keen eye for spotting emerging trends, a deep understanding of industry dynamics, and the ability to assess a company's long-term growth potential. While there's no guaranteed formula for finding these elusive gems, certain characteristics are common among companies that have achieved 100x returns. These high-growth companies often operate in nascent industries with massive untapped potential. They are led by visionary leaders with bold ideas and the tenacity to disrupt the status quo. And they often develop products or services that solve real-world problems and cater to unmet market needs. The annals of financial history are replete with captivating tales of 100x stocks, companies that rose from obscurity to become industry titans, generating life-changing wealth for their early investors. One such example is Amazon, the e-commerce behemoth that revolutionized the way we shop. An investment of $1,000 in Amazon during its initial public offering in 1997 would be worth millions today, a testament to the company's relentless innovation and market dominance. Another shining example is Netflix, the streaming giant that disrupted the entertainment industry. Early investors who recognized the transformative potential of its streaming platform were handsomely rewarded, as Netflix stock surged over 100x from its 2002 IPO price. These success stories underscore the transformative potential of 100x stocks and fuel the dreams of investors seeking to unearth the next big winner. However, it's important to remember that for every Amazon or Netflix, there are countless other companies that failed to live up to their hype, their stock prices crashing and burning, leaving investors with heavy losses. The world of 100x stocks is littered with both spectacular successes and cautionary tales, highlighting the importance of careful research, due diligence, and a balanced investment approach. Section 4. Fueling the ascent. Factors behind explosive growth. What are the key drivers behind the explosive growth of 100x stocks? What sets these companies apart and propels their valuations to stratospheric heights? The answer lies in a confluence of factors, a perfect storm of innovation, market trends, and execution that creates the ideal conditions for exponential growth. First and foremost, 100x stocks are often pioneers in their respective industries, disrupting traditional business models and creating entirely new markets. They are driven by innovation, constantly pushing the boundaries of what's possible and developing products or services that capture the imagination of consumers. Think of companies like Tesla, which revolutionized the electric vehicle market, or Apple, which transformed the way we communicate and consume information. Second, 100 times stocks often benefit from favorable market trends, riding the wave of secular growth in their respective industries. For instance, the rise of e-commerce, cloud computing, and social media created fertile ground for companies like Amazon, Salesforce, and Meta, formerly Facebook, to flourish and achieve phenomenal growth. These companies were not only at the forefront of innovation, but also perfectly positioned to capitalize on the explosive growth of their respective markets. Finally, 100 times stocks are typically led by exceptional management teams with a clear vision, a bias for action, and the ability to execute their strategies flawlessly. These leaders are not afraid to take risks, challenge the status quo, and make bold bets that pay off handsomely. They build strong corporate cultures that attract top talent and foster a relentless pursuit of excellence. Section 5. Balancing risk and reward in the 100 times pursuit. While the allure of 100 times returns is undeniable, it's crucial to approach this investment strategy with a healthy dose of caution and a clear understanding of the risks involved. Investing in high-growth stocks, especially those with the potential for 100 times returns, is inherently risky and not suitable for all investors. The stock market is inherently volatile, and even the most promising companies can experience significant price swings, leading to substantial losses, especially in the short term. One of the biggest risks associated with 100 times stocks is valuation. These companies are often priced for perfection, with their stock prices reflecting lofty expectations of future growth and profitability. Any hiccup in their performance, any misstep in their execution, can lead to a sharp correction in their stock price, wiping out a significant portion of an investor's capital. Moreover, the very nature of 100 times stocks makes them susceptible to speculation and market hype. Investors often get caught up in the frenzy, bidding up the stock price far beyond its intrinsic value, creating a bubble that eventually bursts, leaving investors with heavy losses. Therefore, it's crucial to approach 100 times stocks with a long-term investment horizon and a willingness to stomach short-term volatility. Don't chase quick profits or get swayed by market hype. Instead, focus on identifying companies with solid fundamentals, a sustainable competitive advantage, and a clear path to long-term growth. In conclusion, the pursuit of 100 times stocks is a high-risk, high-reward endeavor. It requires a deep understanding of market dynamics, a tolerance for volatility, and a disciplined investment approach. While the potential rewards are life-changing, it's crucial to remember that not every high-growth stock will turn into a 100-bagger. By conducting thorough research, diversifying your portfolio, and staying informed about market trends, you can increase your chances of finding the next 100 times stock and potentially securing your financial future.